Alrighty, good morning from Paradise Surfers. So pleased to be here with you guys today. We're joined with none other than the Brown Cowboy, the founder and CEO of the famed Frontier Fund that has been printing returns for us. Everyone who's obviously participating, got your 400,000 surf, gotten in the Dow, and you're in Frontier Fund, done very well, despite the fact there was a big drawdown the end of the last cycle here. So we're going to cover that big drawdown, the October liquidation events, general market conditions. So going to be a wide-ranging interview. Happy to have you here, Taha. So, all right, for those who, I guess, are not familiar with Frontier Fund, let's just give them like a broad sort of overview, and then we can dig into some more specifics.
Yeah, absolutely. Excited to be here. Thank you guys for having me. I think it's been about a month and a half. Always love to be on Crypto Paradise shows and interviews, and excited to be part of the community. So the Frontier Fund, for those of you that may not know, is a real yield generating fund that generates yield by actively managing risk and compounding on a daily basis with intelligent moves instead of just kind of risking the whole bag with extremely high leverage on just emotion-based trading, which is where a lot of traders end up losing money. And we manage that risk and have managed it in yield up days, also in drawdown days that are inevitable when you're trading in the market. And we continue to provide a consistent yield on a long-term basis. If you look over a year, we've actually generated about $1.85 million in gross revenue over the last 12 months through the fund. And something very proud of, because in that same 12 months, I don't think a lot of other crypto projects can say that in the space, to have generated that amount of gross revenue.
Yeah, no doubt. And if you just simply held on Bitcoin, held on Ethereum, which we, by the way, we are always advocates for holding, having, frankly, a large portion of your portfolio is just holding long term. But your trading bag, I don't think you're going to find, another fund or other trading outfit that's going to outperform Frontier Fund, even with that the drawdown that we had at the end of the last cycle. So I guess let's talk a little bit about that, because I'm sure folks who are in the fund and they're curious about kind of what happened, because you had a huge win, right? You had a big win coming into, I think it was on the huge dump day, the liquidation event in was that October 10th or something? You had a big win then, and then a series of missed trades, I guess you'd call. So what actually happened? So I guess tell us about the big win, and then what happened thereafter, and then what changes are you making too to sort of mitigate any risk that may happen again?
Yeah, absolutely. So I'm going to actually pull up the numbers on my side, because some of these wins are really, really exciting to talk about. The biggest one that we had was actually, let me pull this down over here. And I just want to do a quick sound check. You can still hear me okay?
Yep.
Okay, perfect. So this was on October 10th. 10/10 is now, I feel like an event in crypto. It was the largest liquidation event in the history of crypto. 19 billion reported liquidations. And there are reports that there's significantly more, 3 to 4 times, even up to 10 times more, because Binance APIs only report one liquidation data point per second. And there was so much happening. We were actually positioned for that, because this is when Bitcoin had gone up to 126K. And we don't look at just the market factors, because typically when Bitcoin is doing that run up, you have a tendency to think it's just going to keep going to 250 because it's broken through all-time highs. We look at liquidation levels and other macro factors. So we knew that there was going to be a pullback, and we were counting on that pullback to come to maybe 115 range. And if you remember in the chat, we were having those conversations. We held that trade. That was the longest trade at that time. The bet was about 228 hours of constant monitoring that we were doing at that time. And we ended up coming out with a net profit of 326,257 on that specific trade. That's gross before fees for the fund participants. So it was a great trade. And what ended up causing that is we knew that the 115 level was critical, based on not just the previous support levels, but there was a liquidation element that if that broke, there were going to be significant liquidations going down. President Trump announced the China trade tariffs right around then, and that triggered the downturn from 115 to 113. Well, what ended up taking it from 113 all the way to 100K in a matter of seconds was not actually the tariff news. It was the manipulation that came as a result of the market makers and Binance and Wintermute, who were involved with trading activities. I'm not here saying that they were manipulating the market. This is just my opinion, and based on the data I'm seeing, that we saw a lot of sell volume that was looking to capture the longs all the way down to 100K, and they used the tariff event as a trigger, and it just caused a massive dump. We happened to be on the right side of that. Even people who were trading with 2x leverage got liquidated on that day, and we happened to benefit from that downturn. Typically, if we were even on the wrong side of that, the way we manage risk is that we typically deploy only 50% of our managed fund. And we keep the other 50 to do margin and entry improvement. So even if we were on the downside, we would have automatically triggered the orders when it goes down. You cannot place orders. Our orders are pre-placed to protect the positions, and would have pre-placed the order and brought our liquidation down into the low 90s, high 80s, and would have saved us from that liquidation. But luckily, we profited from that. So that was an event that worked in our favor because of the data and some of the manipulation that we were able to take advantage of that was happening in the market. I'll stop there. Maybe you have some thoughts, comments on that, and then we can continue on. What do you think about that, Amar?
Yeah, you guys played that one well, and that one we were on the right side of it, and everybody in the Frontier Fund was super happy. It looked like we were going to close this round with big gains again, because every other round has been a big gains. But then we had yet a run from those liquidation levels back to like 116, and then another sell-off. And I think that's where the fund then had some losing trades, and why this round is still open. Because people are like, when's this round going to end? So do you want to kind of talk about how some of those gains were given back to the market? And then what's your future outlook on when this round ends and when the next round opens?
Yeah, absolutely. That's a great question. So in terms of our drawdowns are going to happen when you're trading. Like when you hold, you obviously have the value of the portfolio go up and down. Drawdowns are going to happen. Even with the drawdowns, we have 4 significant drawdowns over the last year. And all of them have a pattern, and I'm going to talk about that in a second. But even with those 4 drawdowns, we have a 90 to 95% win rate depending on which round and the time frame that you're looking at. So what this tells us, looking at the data and the pattern, that our trade and yield generation is not based on chance. It's very methodical, and it is serving a consistent revenue stream for us. The areas that we were having problems with is yield retention. So that means that once your profit is mid-made, is how can we ensure that we continue to generate more profit without losing the profit that we've made? And we have added layers of protection to do that. But I think we finally found the mix that is going to isolate the yield that has already been generated in the best way going forward. So let's talk about what has been causing that. So as an example, after that $327,000 profit, we were over $1 million in generated capital, and yield, total yield had brought the capital for Trailblazers around over $1,056,000, I believe. And we're well on our way to exceed that as well. The problem comes into play is that when we place our bets, we look at macro indicators and we accept that there's going to be somewhat of a downturn during the trade hold position. So this trade that caused a downturn was about 228 hours of holding for the profit one previous. This one that caused a drawdown was 440 hours of holding. So almost a month of not just holding, we're actively managing, we're hedging bets, we're optimizing, we're betting against the trade in some cases to improve the entry position. And so our target was to go above 116. We got an entry at about, I think, 117, improved at 116 because there were macro indicators at that time that showed that it was extremely oversold and it was going to go in the positive direction. This is when the crypto market started diverging from stocks, started diverging from news. Like you would have good news, crypto would dump. Bad news, crypto would dump. The liquidity indicators would say that all the liquidity is on the upside. There's no liquidity on the downside, and crypto would dump. So the indicators are going in the opposite direction, but that's okay. We account for that. We account to improve our entries on the downside. And that's why if you look at this history of when this downturn happened from 116 going down, Maki Brother, you had pretty much all of the major traders, that even traders with 100% win rate got liquidated or were in significant losses. We were able to protect the position and still had a drawdown. So how could we have prevented that, and what are we implementing to prevent that going forward? Previously, to protect our profit position, so we were actually at a profit of 150K on this trade that ended up causing a drawdown. But the indicators at that profit of 150K level showed that it was going to go to about 300K plus in profit. And that is important for us because that is yield that we want to provide to our participants. And the way we protect that profit, saying once you've made the 150K, if you don't want to liquidate the trade, but you also don't want to lose, we put something called stop loss orders. Because we trade on hyperliquid, we don't have trailing stop loss, so those orders don't automatically update as the price goes up. We have to manually update them. Stop loss orders have 2 kinds, stop loss limit or stop loss market. We typically do stop loss limit because our order sizes are in millions of dollars. For example, this order size is about 4.5 to 5.3 million at different positions. If we do stop loss market, in some cases the liquidity is not available. The 150K in profit may liquidate with only 20K in profit because there's just not enough orders on the order book. So that's problem one with stop loss market, because with limit, it says that we only want to liquidate, let's say at 116,500, anything below don't liquidate. So that's a benefit that will only liquidate that. But it's also a problem because the way stop loss limit works is that let's say the price went up to 117 and started to come down. It came to 116,450. So it has triggered our stop loss at 116,500, but it has not executed yet. It has to go back up to 116,500 to actually execute. So there's two instances. First is the trigger. The second is the execution. And that doesn't happen when there's a downturn without an upcycle. So this has been the cause for the last 4 drawdowns this year, is that stop loss gets hopped and it doesn't come back to trigger. And then we have to go into positions to save the position, improve its entry. And if we can hold it long enough without liquidation risk, we typically come back. But in 4 instances, we had to protect the overall capital and liquidate at a drawdown. So how are we solving for that? The way we've solved for that is that we have implemented, there's a UI-based strategy which mimics a trailing stop loss. So what we're able to do with this new strategy, it involves more work on our part, but we feel it's worth it because it allows us to preserve more capital. So we will conduct stop loss limit orders, which means we have to place less trades on Solana because the liquidity is not there, and more trades on Bitcoin. It's got about 5 to 10 times more liquidity on the order book at any given day on average. And we typically will slide the stop loss market order up as the price goes up. So this means with 150K profit that we had in this trade before the drawdown came, we might have come out with 75 to 100K in profit instead of the net drawdown that we had. And we're willing to accept less profit instead of going to a drawdown going forward, given that we have to manage, I've simplified this a lot. We have to break our orders into 3 and 4 orders. So instead of 4 million being liquidated, it would be 500K, 200K, 100K, million. So we have a bunch of orders that we have to update on a regular basis without canceling them. So it's a bit more work. It's a bit more involved. We have like multiple screens set up and our sort of deck set up for myself and Assad. But this is, we run testing on this. This is going to improve our capital retention by about 95% going forward. Already seen a good side of that in the trades that we've done since then.
Yeah, appreciate that explanation. You know, from the standpoint of someone who's in the fund, been in since March. I was like one of the early test cases, done very well for me. But yeah, I'm all for kind of accepting less potential upside if that's going to mitigate some downside risk. You know, at a certain point, it's just, you know, I'd rather just consistently make a little bit every day, maybe not take as many losses, but a little bit less every day, but it just compounds over time. That I think is going to long-term benefit the fund, everyone involved. So I'm all for the sort of the risk mitigation efforts you guys are taking. I understand it's a bit more work, but it seems completely worth it. I don't know, Nick, if you have any questions or comments around that, but I'm happy to hear you guys are doing that.
No, I think less profits is still better than no profits, and there is going to be some where you look back and like, dang, if we would have let that run, we could have made a $300,000 gain instead of the $100,000 gain or whatever it may be. But at the end of the day, with the fund being so young and it being like a monthly execution period for profit taking, I think people would like to just be able to have those profits and decide if they want to compound. Also, it makes it easier for the fund to onboard new investors if you're consistently actually closing the round in their profits and allowing new investors to potentially get in, because some people are buying surf trying to get in this round, and when these type of things happen, it delays the next round opening, which kind of leaves them, you know, holding the bag of surf and not able to get into the trailblazer round or whatever the next round may be. So, you know, hindsight's always 20/20, but yeah, less profits probably makes more sense both for an early stage fund to acquire more AUM, but also for those who are kind of using this as an income stream. You know, a little bit of income is better than no income when it comes to, you know, monthly drawdowns, etc.
Yeah, and I think the beautiful thing about the justice strategy is that we still are able to take the benefit of upside. So for example, if the same implementation was implemented before the drawdown happened, we would still have stop loss market orders. And if it kept going up, we would just keep moving those orders up. But because of slippage on the order book, we would just take less profit on execution. So it's not that we're giving up. Like let's say Bitcoin did a run up to 130K. We would have been able to move those orders up to 120, 125K and still liquidate with decent profit, just taking a higher slippage, 10 to 20% in some cases based on the order books. And that's still very acceptable. And I think this is going to be great overall for folks as well, because even in the low yield scenarios, even if we're generating 10K per day on capital, that's $1.865 million in gross capital generated over a year. So when you look at it on a yearly basis, it's a significant return. And that's the part that gives me confidence. Even though we are at a drawdown right now, we're working our way back to initial capital and then working our way back to the target of 1.2 million that we want to generate for this round, that we have consistently been able to generate yield regardless of market cycle. We sometimes take a back seat when the strategy indicators are outside of our acceptable bounds. But for the most part, we've had a really good track record of being able to generate yield regardless of the market condition.
Yeah, so let's talk about that a bit, because this market's been challenging, even for us diehard hodlers. Certainly for you traders out there, it's been damn near impossible. But what do you make of this market over the last, say, month? Is this just like manipulation? Are we about to pump again because the lag on gold versus Bitcoin? Is this quantitative tightening? The end of that? Is this the reason? Like, what do you make of this really challenging market? If you have an opinion, or maybe just looking at the charts and saying, the charts are the charts.
Yeah, that's a great question. I think in today's day and age, if you are trading just the charts, you're going to be at a disadvantage because it's a very emotional market, and those emotions are then taken advantage of by the folks that are manipulating the markets. One of the key indicators I showed in our last video are liquidation levels. So 75+% of the volume in crypto is coming from leverage trading. It's not from spot trading. So that means that when you look at volume numbers of CoinMarketCap, a significant amount is based on bets on long or short. And these market makers and exchanges basically loan out that money in order for these leverage traders to make those bets. So they have an incentive when there's a lot of long bets underneath the current price. That means there's a lot of money that they've loaned out, and they want to liquidate those traders to get that money and then buy the dip to drive the price up and then liquidate the shorts. So this activity is happening on a regular basis, and it is part of the reason why the crypto market is not aligning with the news factors, is with stocks and even with gold. It's a bit frustrating, but we have tried to take that frustration and turn it into data that we can trade on. And that's been one of the reasons for our success, that instead of just looking at, for example, the government shutdown coming up, why did, with the shutdown news ending, why is Bitcoin dumping today? Well, if you look at liquidation levels, you'll see the story that everybody was longing the fact that the government shutdown was going to end and the market's going to pump. And so the market makers and the exchanges and the folks that have a vested interest want to capture those long liquidations, because once that happens, there's a good chance that the price is going to take off, and it will take a lot more money, a lot more sell pressures to eat that liquidation. So that's what we try to take advantage of. Long term, I think the market is still not done yet, in my opinion. I think there is going to be some chop because of the amount of leverage that is in the market. There's going to be some chop up and down, but I do think Bitcoin will still make another all-time high. I think that's going to continue through January, perhaps into February, before we start to see a cooling down effect. But I do think that with the stimulus checks, there's going to be some more downturn coming with the economy. The quantitative easing is going to come through in December, but between now and then, there is going to be some chop, and these market makers and exchanges are going to try to take advantage of that, and we're going to try to ride that volatility into generating some yield.
Yeah, that makes a lot of sense. After the Senate passed to open up the government, Ethereum ran from like 3,000 to 3,700, but then today, when the government actually is about to be open, we're seeing a couple $100 drawdown. So, that makes sense on what's going on with the exchanges and how they're trying to shake people out of those leveraged positions before any more upside or downside will occur.
Yeah, man, tough market to be operating in right now. Sort of belies logic sometimes, but I guess you look at it from the standpoint of the majority of this, the crypto market is now basically taken over by perpetuals and leverage trading, then that kind of starts to make a little bit more sense as to what's going over the past few months. But my theory is that eventually they need to manipulate the price up, not just down. So for you hodlers out there, that will happen at some point. We stay locked in, we stay believing, but it's great to have someone like Taha working on our trading bags versus just, you got your holding bag and your trading bag. So great to have someone like Taha on your side for that. All right, so we covered a lot of ground today. I didn't know if we touched on sort of the new structure around this particular round that we're in, because it did get extended out, so you guys can recoup some of those losses, make some profits. Has any decision being made as to whether you'll have like a interim withdrawal period? The round isn't over per se, but you have an interim withdrawal period to like take some profits out, whatever. Has a decision made on that yet?
Yeah, I think we really appreciate everyone putting the support and capital into the round, and having faith in the process. But more than faith is like you need results. So what we're looking for is our first milestone is to get net neutral. Once you get net neutral, after that, we're going to start hitting checkpoints for profit generation. We do expect, I gave a timeline for around January 2026 is when I expect for us to hit the 1.2 million capital milestone once again. It could happen earlier. It could take a little bit longer. But how are we going to allow people to be able to take profits throughout that journey? Because people might have plans for holidays. People might have plans just to be able to take profits anyway, because they weren't expecting to be in the round until January. So what we're providing is that the same 30, 45, and 60-day marks. We'll try to hit those profit targets at those points and give people the ability to either retrieve profits themselves or be able to say, I just want to roll it over. Those exact dates I'm going to share in the next day or two. I'm going to share some of those checkpoints with the caveat that those dates can move up and down, 1 or 2 days if there's a trade open. But the general target, as we have done in the multiple profit distribution events in the past, is they're kind of providing you a direction and a milestone. Hey, by this time frame, we expect to have generated some profit, and you can choose to take some out or roll it over. So this is our plan. Essentially, you can just think of it as another round, even though it's an extension. So it operates the same. That mindset kind of works well. And we hope we can beat those timelines, because the market should be looking pretty exciting here as you get into the second half of November and get closer to December with the quantitative easing coming up.
Is there any opportunity for new investors to invest in the fund, or do they have to wait until this round is officially closed?
We will, once we hit net neutral, we actually will open it up for folks to be able to participate as well. And they will probably benefit from that, because there's going to be a lot of movement from December to January in the markets. It's going to provide good yield potential. So at that point, what will happen is that everybody that's in the Trailblazer round will get a snapshot. We'll do an equity update for the proportional holdings, and I will actually give an opportunity for people to participate if they choose to.
That's great to hear. My expectation, my guess is that folks will take some out, a little bit here, there. But in our experience, what we've seen from the investors is they'll take a little bit out, but for the most part, people are keeping it in because, it's just gaining a little bit every day, compounding. Yes, there's been some losses, but usually those do get recouped relatively in short order. And then just continues to compound and grow, whereas like my hodl bags, as dear as they are to me, are not going up right now. They're not going up right now, unfortunately. So, for all those who have been a little disappointed or upset with, the recent drawdown or whatever, I suggest looking at your hodl bag and comparing it to, your Frontier Fund money. And my guess is Frontier Fund, even with the drawdown, is probably beating just holding at this point in the market.
And we've been through we've been very clear, and I think there's a good opportunity to share with everybody what to expect as well. Drawdowns are inevitable. Our job is to manage and limit those drawdowns, and I think those strategies that we've implemented now are going to limit those drawdowns significantly. I'll also be sharing in write-ups how the overall capital at risk, like currently it's about 50% on average on our trades, because that's our strategy and that works, and then that reduces the drawdown. That's also going to reduce. Once you pass the 1.2 million mark, there's a reason I'm targeting that number. The capital at risk at any given point is going to be 10% or less. And the drawdown amount is going to be significantly less too, because our strategy can change because of the amount of capital at that time. The more capital we have, the less risk overall we have to take to generate the similar yield targets. But what I want to hint on is for people to look back on the Pioneer round. The Pioneer round also had a drawdown from 700K down to under 400K, but ended with more than doubling the initial capital, about 546K plus. And we're extremely confident that we can accomplish the same numbers and provide a very healthy yield for participants. And all this time, while there's a drawdown, there's no fees. There is no kind of additional or administrative fees. We only make money when we generate profit for our participants. So it is purely performance driven. And I think that's something that we're very proud of. It also motivates us a lot that if we want to eat, we got to make sure that everybody that's participating in our rounds also eats. And I think that's something that we really stand behind.
Yeah, that's good to mention, because a lot of traditional funds will be like a 2 and 20, where it's like 2% no matter what, and then 20% of profits. So even in these times or the elongating rounds, you're still making money, and that can put a sour taste in people's mouths. But in your case, there is no set fee, there is no administration fee. The only time you guys take any fees is when the overall fund creates profits, and those profits
Absolutely.
are drawn by their participants.
Yep. And the 2%, if you look at it, as well in detail, there's a lot of hidden fees, like the fees that we cover in terms of the platform fees. Then you have trading fees. Then you have the funding fees for the loan itself. Like all those typically end up between 8 to 10% total actually being taken out. And none of that, all of that, those fees are paid from our profits and the total capital operation costs. So it does seem like a sticker shock for those that are looking at it new, but I like simplicity. And I think simplicity works really well because it allows us to focus on quality, focus on good trades, generating yield, and easy to understand for everyone who wants to participate.
Yeah, and if you think about, the fact that you see guys essentially just work for 2 months for no pay, it's sort of, you realize, okay, we're all in this together. We're all in this together, folks. If you're in the Frontier Fund, when there's a drawdown, everyone's feeling, including Taha and his team. So, interests are aligned with the 50% fee structure. For those who are curious to learn more, my suggestion is get your 200,000 SERP tokens, get into the DAO. That's the only way folks are actually allowed to enter into Frontier Fund. It's one of those exclusive investment opportunities. In fact, you need 400,000 ZERP to enter the fund, 200 to get in the DAO. Start to ask some questions, figure out if you want to participate. The way I look at it, and just speaking personally, it's wonderful to have someone like Taha, very professional, literally working on your trading bag full time. There's almost no way, in my estimation anyway, that anyone could outperform Taha right now if they were just doing this on their own, right? Maybe if you have some algos or some AI doing it for you, I don't know. Maybe it's possible. But for the most part, average Joes trying to get out there and get the perpetuals markets and now compete, Binance, et cetera, Wintermute, that's just a tough game to play. So, for me, I love having a portion of my trading portfolio handled by Taha and his team. And then, I have my hodl bags as well. It's long-term, hold for 10 years, retire on the beach. So that's not financial advice. That's how I look at Frontier Fund. It's done very well for myself, even with the drawdown. So looking forward to seeing what you guys can do over the next couple months here. Hopefully hit the targets and take little profits along the way. I think that's win-win for everybody. But yeah, Nick, Taha, any final thoughts before we jump off today, guys?
That's it from my side. I appreciate you guys having me. It's always a pleasure, and looking forward to generating yield for everyone involved.
Yeah, I think that's all. And of course, the members of Crypto Paradise will get updates on the current Frontier Fund round and the next round that you can actually allocate new funds into, and the profit-taking opportunities that we hope we have in the future.
Awesome, guys. Well, thank you so much, Taha, for your time. Thank you, Nick. And until next time, guys, we will see you on the beach.
Crypto is on the rise, making that